Good afternoon and welcome to the end of week market review for September 6, 2013. You are going to see that our US markets are rising bearish while our Canadian markets are rising bullish. And taking a look here at our agenda, you're going to see that we're going to be covering off a few things. First off, we're going to be taking a look at the market news and just seeing what's been going on and how it's been influencing the technical analysis. We're then going to go ahead and look at some economic reports just to get an idea of what's been going on from the economic standpoint. From there, we're going to be diving into our technical analysis. This is going to include analysis on both the S&P 500 and the Toronto Stock Exchange, while here we'll be looking at daily charts as well as weekly charts, both short-term and long-term. And then we'll wrap things up by taking a look at the volatility indicator just to get an idea of where the volatility is at and how it's affecting the overall market conditions. So as we said, the markets are rising bearish right now, and this is right now due to some concern coming out of Syria. There's obviously that chemical warfare concern, and then on the lighter side, we did end up with some good positive jobless reports. So all in all, the markets were at a little bit of a pull left and right. We did manage to keep the markets up for the week. The Dow Jones is up 0.76% from last week's close, with the S&P 500 up about 1.36%. Now going in and taking a look at the commodities, we can see that oil is currently up 1.72% from yesterday. This puts it to $110.23 per barrel. Taking a look at silver, we can see that it is up 0.23%. This puts it to $23.82 per ounce. Gold is up 1.13%, putting it to $1,388.50 per ounce. And then finally, we've got the US Canadian pair up 0.009%. This puts it to 1.0429 pips. So going ahead and looking at the economic reports, the first and most important thing that we look for is the jobless claims. We can see that they were expecting about 335,000. Instead, we ended up with 323,000. Definitely a good thing. It means that the markets ended up having fewer jobless claims than expected. All in all, pretty good. While looking at the S&P 500, on the daily chart, you're going to see that we're currently up against some overhead resistance. This is the 50 and 22 EMA, both of which are around 1655. You can see that the S&P 500 has been attempting to break up beyond that. Today it definitely did get a chance to work itself up beyond it, but by the time the day ended, we ended up back down below that resistance level. Now the MACD is rising bearish with the black line over top of the blue line. The fact that we're having troubles breaking through these EMAs is largely due to the fact that the markets themselves are bearish. Had we been looking at a bullish market condition, it's quite possible that we would have seen a clear breakthrough. Moving into the weekly chart, you're going to see that the S&P 500 is pulling back down to its 26 EMA. Here, if it follows its typical trading range, it'll end up finding support and then work itself back up into even higher highs. Here we're really zooming back as far as we can go just to really get the big picture and see where the S&P 500 is. You can see that it's very clearly at some all-time highs. The fact that we've pulled back is nothing significant at all. You can see that we've had these pullbacks or these potholes many times in the past, only to see that we've reached new higher highs just a few weeks to a couple months later. Now looking at the Toronto Stock Exchange, you're going to see that things are a little bit different here. You are going to see that it's rising bullish and with its black line over top of the blue line. This means that right now the TSX is in better shape than the S&P 500. This is more than what we could say of a couple weeks ago where the TSX was lagging behind. All in all, though, we did see that we had a slight decline on the day, so it's very possible that we will end up seeing a few more down days. Hopefully that if we have a pullback, it'll go no lower than the 22 EMA. Moving the TSX onto its weekly chart though, you're going to see that although we've had a pretty decent daily chart, we are still dealing with quite a bit of overhead resistance on the weekly chart. Despite the last little dip here where we found support at the 26 and 40 EMA, we did end up with a cycle low which was lower than the low prior to that. So all in all, the TSX is just at its infancy state as far as gaining momentum goes. We're going to hope that it will continue to do so, but we're not really going to be trading that aggressively, expecting it to happen. Now this obviously gets further emphasized when we look at the TSX going back to 2004. You're going to see that we've got tons of overhead resistance, plenty of cycle highs that we know are going to be large milestones that we're going to have to break through in order to see the TSX really push itself up into its all-time highs. So all in all, not too bad. Right now it seems like most of our trading is definitely coming out of the TSX right now, though, just due to the market conditions. Going back to our volatility indicator, right now we can see that it is currently at 15.85. This means that we've got a little bit more resistance or overhead in instability that we're looking for. Sorry, getting caught up here. A little bit more volatility than what we'd like to see. Normally this indicator trades down below the 200 EMA, so we're not going to be that concerned with this yet, but if it gets up into the 18s, 19s, or 20s, then definitely will show more concern. Ideally though, when the S&P 500 breaks up above its 22 and 50 EMA, we'll see the volatility indicator work itself back down again. So this has been the end of week market review. If you have any further questions about anything that we've discussed, you can either send us an email or a phone call. Both our email address and phone number are listed on the screen. So again, we'd like to thank you for attending today's presentation for September 6, 2013. Ciao for now.